Hello traders, hello traders. The title of the video is how to take advantage of 78.6% Fibonacci retracement as a bullish trader or investor. Alright, have you been using the 78.6% Fibonacci retracement level? I need to remind traders that I personally use 78.0 instead of 78.6% level. The 78.0% works better than the 78.6% Fibonacci retracement level. I recommend to Fibonacci traders to use the 78.0 instead of 78.6% Fibonacci retracement level. All right. The financial instrument that we are analyzing today is a biomarine pharmaceutical, epic BMRN. Bravo, Mike, Romeo, November. This stock belongs to the healthcare sector and is listed on the NASDAQ 100. All right. How to take advantage of 78.6% Fibonacci retracement as a bullish trader or investors. So investors want to buy and hold, all right, that's their intention. So the investor will do first what we call fundamental analysis, checking the management, all right, performing Google Assistant, checking the fair value of the financial instrument, whether it's intrinsically oversold. They will check also their market share, all right, the management, all right, and most importantly, how they are coping with their competitors. After that, all right, those investors will look for a good reason why they should buy and hold the stock for long-term purposes. One of the reasons why investors will buy a stock for long-term purposes is because the stock is oversold or is discounted or is below its fair value. Oversold, discounted, or below its fair value, provided that they have a brighter future, management excellent, all right, and they are coping very well with the the competition, all right. So you may say to me, Joe, what that got to do with how to take advantage of 78.6% Fibonacci retracement level as a bullish trader or an investor? All right. So I want to draw traders' attention to the power or the importance of the 78.6% Fibonacci retracement level. First thing you need to understand is that professional traders, investors, hedge funds, long-term investors, love stocks, bullish stock that pull back to the 78.6% Fibonacci retracement level because it equals to 78.6% discount. It's like Christmas sales. So here we are, a financial instrument with excellent management, brighter future, coping with the competition very well. Now, for one reason, it pulls back to the 78.6% level. Hedge fund, mutual fund, all right, they all want to invest for long-term purposes in that stock. All right, taking advantage of the 78.6% level as a technical trader or bullish trader, you want to understand few things. You see, biomarine, you can see went up, so the initial move must be bullish. So there must be a bullish trend first before the pullback to 78.6%. So first condition, it went up from 2005 to 2008. Good. So which means if a financial instrument went up, is equal to market sentiment was bullish for that financial instrument. Now, when we want to buy and hold, and when we are talking about bullish trader, you do not want to refer to the financial instrument that you are trading alone, talking about biomarine. So you see, oh, market sentiment was bullish for biomarine, but that's not sufficient. Let me say this again one more time purposely. That is not sufficient, okay, to continue to buy the stock just because people were bullish for that particular stock. There are two factors that will determine if you consider yourself as a bullish trader. Two things you must check all the time. Is the market sentiment for that particular stock or financial instrument that you are trading is bullish? Yes, good. Now, one must go and check the S&P 500, which is the market itself. Is the market sentiment also bullish? So we want to trade bullish stock or stock with bullish market sentiment. We want to buy and hold stock or financial instrument with bullish market sentiment when the S&P 500 itself is bullish. All right? So from 2005 to 2008, biomarine was going up, and S&P 500 was also going up. Okay, you see that? That's 2005 here. 2008 right there, both were bullish. But as biomarine was pulling back to the 78.6% Fibonacci retracement level, now this is something very interesting. The S&P 500 only pulled back to the 50%, where are we? Am I correct? To the, where am I? To the 61.8% Fibonacci retracement level of, okay, the prior trend. So for S&P 500, see here, there was this bullish move, that's 1980 up to, all right, 2000, S&P 400 was bullish. It pulled back first time, and again for 2005 to 2008, it went up again to retest the same top of that prior trend before. And as the S&P 500 was pulling back, it only stopped at the 61.8% Fibonacci retracement level of that gigantic trend, bullish trend. So here we are. The market itself, the S&P 500, pulls back to which level? 61.8% level. Now, this is about the market sentiment. So if a financial instrument pull back to 61.8% level, the zone between the 50 and 61.8% level is called the sweet spot zone. If you find a support there start going up, it's bullish. So the market sentiment was changing from 2009 in the sweet spot zone for the market. So we can say that the market sentiment is becoming bullish in that zone. At the same time, biomarine was retesting the 78.6% level. But look at that. The market only pulls back to 61.8% level, and biomarine went a little bit deeper, which means the market, the biomarine was highly discounted in comparison to the market. Or we can say that the market was more bullish than this market sentiment relating to the biomarine, because they push it down to 78.6% level, while they only push the market down to 50% level. So our challenge, all right, talking about how to take advantage of 78.6% Fibonacci retracement level as a bullish trader or investor, we now go and check the fundamental of biomarine. And if the fundamentals are solid, excellent management is in place, they are coping very well with the competition, they have a brighter future, well, we have a good reason to take advantage of that 78.6% Fibonacci retracement as a bullish trader or an investor that is interested in biomarine, pharmaceutical, epic BMRN, Bravo, Mike, Romeo, November. So in order to take advantage of the 78.6% Fibonacci retracement as a bullish trader, an investor, bullish trader want to buy for medium to long term, investor want to buy for long term, we want to check the market, the retracement of the market. We will compare it to the retracement of the financial instrument that we are trading. If the market retracement is lesser than the retracement of financial instrument that we are trading, and the market is becoming bullish, we will check the fundamental of the financial instrument that retraces to the 78.6% level. We will check the market share. We will check how they are coping with the competition. We will have a bit of idea how their future is looking brighter, or how they can cope with the challenges ahead. If everything is looking rosy, so to speak, to the financial instrument that we are trading, in a bullish market environment or in a stronger bullish market sentiment environment, we have a good reason to buy and hold that financial instrument. That was the case for biomarine, pharmaceutical in 2009. The S&P 500 only pulls back to the 61.8% Fibonacci retracement level, or the sweet spot Fibonacci retracement level, for the trend that started in the 1980 up to 2000. Now the S&P 500, talking about the Federal Reserve policy, they were talking about stopping, they were pumping money into the stock market, all right, devaluing the dollar, so excess of credit, free credit, zero interest rate, all right? So a lot of leveraging taking place, all right? People were pumping stock, a lot of money in the stock market. The S&P 500 was turning around in 2009, all right? And the biomarine, strong fundamentals, strong management, brighter future, coping with the management, coping with the competition very well. The common set trend line for technical trading were broken at the 78.6% Fibonacci retracement level. The stock was discounted at 78.6% exactly, all right? And we know that we are in a bullish market environment, and the stock has a good reason to go up. We will only look for an opportunity to buy and hold as a technical trader or an investor. Sometimes traders are wasting a lot of money in the financial market, day trading, swing trading, scalping. But sometimes there is a different approach. You may have two portfolios. One portfolio for trading, technical trading, one portfolio for long term. You may have a portfolio for short term, day trading, scalping, portfolio for medium term. You may talk about, swing trading, position trading, and another portfolio for long term. That will help you to mitigate the risk in the financial market. But what we have seen since the beginning of the online trading, a lot of retail traders only opted for the technical trading, talking about short-term trading. And they have wasted a lot of money over the year because they don't have different approach for their trading portfolio. They could be able to make more money in the financial market if they have different portfolio, short-term portfolio, medium-term portfolio, and long-term portfolio. If one understands how to take advantage of 78.6% Fibonacci retracement level as a bullish trader and investor, one will definitely open up a long-term portfolio to mitigate the risk in the financial markets. I hope you will find the video also useful and will put into use to improve your 78.6% Fibonacci retracement trading as a bullish trader or investor. If you have any question or suggestion, feel free to put in the comment section, and in due course I will be recording another video to answer your specific question. Alright? If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up. If you are not impressed at all, you say, George, I'm not impressed, it's another poor video, please mark it down. However, if you think it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I really appreciate it when traders share our video, and I say to those traders, thank you very much. Alright? Sometimes I'm posting video first on Facebook. My Facebook page is Stochastic-MACD. Follow us on Facebook. Sometimes I'm posting video first on YouTube. My YouTube channel for Fibonacci retracement trading is Day Pro Traders. Subscribe to them and be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSGW24 traders talking about how to take advantage of 78.6% Fibonacci retracement as a bullish trader or investor. If you want to learn more about 78.6% Fibonacci retracement, go to www.dayprotraders.com. Thank you for watching, and I will speak to you soon. Happy trading to you all.